Okay, now first of all, what is fire insurance? Fire insurance is a type of property insurance that help protect you from financial loss if a fire damage your property. It covers the cost of repairing or replacing things like building, home or personal belonging destroyed or damaged by fire. Some policies also cover related damage such as smoke, water or damage caused during firefighting efforts. Fire insurance is often a key component of comprehensive property insurance plans.
In this fire insurance, what are the cover and benefit provided? This policy are cover loss or damage to your property due to fire, lightning and explosion caused by gas used for domestic purpose. This fire insurance are cover aircraft damage, earthquake and volcanic eruption, flood, explosion, damage by falling trees, or branch and object. And lastly, impact damage. For benefit provided, you may extend coverage to following risks by paying additional premium. Duration of cover is for 1 year. You need to renew your insurance policy annually.
Calculating the premium for insurance coverage, it is important to understand the type of risk involved, private dwelling or commercial. The standard cover typically includes protection against fire and lightning, explosion from domestic appliances, water damage from loose tanks, impact damage, and certain natural disasters. The sum insured is based on the valuation or replacement cost of the property. For private dwellings, the minimum premium is RM60, while for commercial risk, it is RM75. The premium is calculated using the formula premium equals to rate multiplied by sum insured plus additional covers. For example, a private dwelling with sum insured of RM200,000 at a rate of 0.1% will have a base premium of RM200. Adding optional cover like flood or theft protection could increase this to RM250. Similarly, for a commercial property insured for RM500,000 at a rate of 0.2%, the base premium would be RM1,000 with add-ons, possibly raising it to RM1,100. By understanding these elements and selecting appropriate coverage, you can ensure your premium reflect both your budget and insurance needs. For a commercial property, the premium calculation can be determined as follows. Assuming the sum insured is RM500,000 with a base rate of 0.2%, the base premium is calculated by multiplying the sum insured by the rate RM500,000 multiplied by 0.2%, which equal to RM1,000. If additional covers such as flood protection or theft coverage are added, costing RM150, the total premium will be the base premium plus the cost of additional covers. This brings the total premium to RM1,150. Since the premium for commercial risk is RM75. This calculated amount exceeds the minimum, ensuring the property is adequately insured with optional covers for enhanced protection.
Okay, next, what are fees and charges that have to pay? There are 3 types of fees and charges. First type is commission paid to the insurance agent, 15% of premium. Second, stamp duty is 10 ringgit, and the last type is service tax, 8% of premium. The service tax, that is ST, amount herein may be subject to change as the ST rate applied shall be based on the prevailing rates in accordance with the laws of Malaysia.
Next is term and condition. There are 2 types of terms and conditions such as consumer insurance contract and non-consumer insurance contract. For consumer insurance contract is if you are applying for insurance for personal non-business purpose, you have to take reasonable care to avoid mispresentation in answer the question. Next, you have to answer the question in the proposal form given and any other required question fully and accurately. Lastly, you have to disclose any information that may be relevant to the insurer decision to accept the risk, determine rates and set terms. If you fail to follow the terms and conditions, it may result in avoidance of the contract, denial of reduction of claims, change of terms of the contract and termination of the contract. Next, for the non-consumer insurance contract, There are duty of disclose such as disclose all relevant information for trade or business insurance. Next, you have to update any changes in information before and after the contract start. Lastly, if you have failed to disclose, it may result in contract termination, claim denial or change in term. The insurance coverage is insure property the correct value. Considering renovation, you have to choose between market value and reinstatement value. For the market value, it cover repair costs, minor depreciation, and for the reinstatement value, it cover full repair costs without depreciation if sum insured is adequate. Review sum insured regularly to avoid underinsurance. For the premium warranty, premium must be paid within 16 days, otherwise the policy is cancelled.
They have major exclusion in this policy. What are major exclusion? Major exclusion refers to specific situation, event, condition or cause of loss that are explicitly not covered by the insurance policy. Here is some of major exclusion in this policy. The first one is loss, damage to theft during or after the occurrence of a fire. The second one, war, civil war and any act of terrorism. The third one is property damage to data or software. And then loss or destruction or damage caused by the pollution or contamination. And the next one, the burning of property by order of any public authority. And the last one is radioactive and nuclear energy risk.
Okay, if you ask me, can I cancel my policy? Yes, you may cancel your policy by giving written notice to the insurance company. You are entitled to a refund of the premium based on the unexpired period of insurance subject to a minimum premium to be retained by insurance company.